Welcome back. Fannie Mae just announced their latest real estate market predictions through 2025. And get this, they are now predicting that home sales this year will fall to a 28-year low. I'll provide all the details in today's video, including their forecast for home prices, home sales, and rates in today's video. This was just posted today, which is December 18th. And of course, please hit the like button if you guys appreciate these timely housing market updates. Thank you so much for joining me in today's video. It says here, single family home sales likely bottomed out in Q4 of 2023. They talk about this pullback in rates as of late here. And because of that, applications or people submitting loan applications to buy houses, according to the MBA, increased by about 15% compared to November's trough. However, the same dynamics that kept home sales in 2023 at their lowest level since the great financial crisis. And by the way, when looking at total home sales though, the lowest level since 1995. I'll share that with you guys in a little bit. Not mentioned in this report from Fannie Mae, by the way. So the same dynamics that kept home sales in 2023 at the lowest level since the GFC, including affordability challenges, the lock-in effect, and the lack of houses for sale will likely persist in 2024. In other words, the same problems that we're facing this year will likely be facing next year as well. And that's why they're forecasting that home sales will not increase greatly next year. As such, this ESR group, which is the Fannie Mae Economic and Strategic Research Group, expects home sales or the recovery of home sales to be meaningful but slow. According to Doug Duncan, who's Fannie Mae's chief economist, he stated the following: notwithstanding the recent mortgage rate rally, housing and mortgage markets will enter 2024 at approximately the same level as he entered 2023. So daily rates, according to the Mortgage News Daily, as of Monday, December 18th, is at 6.65%, a small increase compared to Friday. Jumbo is at 7.04%. FHA and VA is around 6.12%. Rates 1 year ago were at 6.17%, so rates have increased approximately 48 basis points. Now, there's a quote here that we're going to enter 2024 very close to the same rates we saw at the beginning of this year. Have a look at this. To start the year, this year, we were at 6.45%, and right now we're at 6.65%, so more or less rates flat on a year-over-year basis. Let's read on here. Thus, while we think home sales will start to rise over the next year, the combination of modest increases in home prices and still elevated interest rates suggests a slow pace of recovery from previously recessionary levels of housing activity. In regards to the new home construction industry though, night and day difference here. It says new home sales, however, were much more resilient in the face of high rates we saw this year. The recent pullback in rates to 6.95% from the peak at 7.79% in October points to an incoming rebound in sales, but even with recent decreases, rates are currently similar to those in the summer this year. He's absolutely correct because the current rates we have right now are down by about 1.4 percentage points from the 23-year high we saw about 2 months ago. But historically speaking, over the past several years, we're still at very high rates. And on top of that, prices are also have increased greatly compared to 2020 and 2021 as well. Fannie Mae goes on to say the following: we have long anticipated that new home construction would hold up better than what was typical in a downturn due to the fundamental shortage of housing units in the resale market for existing houses. This is one of the reasons why we think the recent economic downturn will be comparatively modest. However, the degree of resilience shown by new home sales and single-family housing starts in recent quarters in the face of high rates rising to near 8% was unexpected. Homebuyers now appear to be more acclimated to higher rates than they were back in 2022, as evidenced by lower degree of order cancellations. So in looking at cancellations of homebuyers overall nationwide, cancellation rates right now are much lower compared to the same time frame of 2022. Additionally, home builders who have been aided by lower material costs and healing supply chain disruptions have been willing to offer all these incentives and concessions to home buyers. So let me just provide some context regarding this, some boots on the ground here. So I went to look at some new home developments with a client who found me on YouTube. If you're watching today's video, I appreciate you. We're looking at houses of existing houses plus brand new home construction. This is in the greater Sacramento area. And what is really eye-opening is all these incentives they're offering by builders compared to existing houses. In this particular area, we're looking at houses of existing houses compared to a brand new house were relatively the same price. However, home builders were offering all these incentives, such as a closing cost credit for $15,000 or to buy down your rate. One builder, which I won't mention in today's video, was offering a rate 2% below current market conditions. And also, as of today, they got a home buyer at a rate of 5.25% for a 30-year fixed rate mortgage. And again, daily rates today is around 6.6%. And that's if you use their in-house lender by the builder. And that is virtually untouchable regarding the resale market because overall loan officers who are not working with a home builder cannot offer these great incentives. And because builders are still able to offer these loan buy downs for a 30-year fix, by the way, this could be one reason why, or this is one reason why home sales for brand new home construction still remains elevated, especially compared to the resale market. And Fannie Mae also states the following here. This trend continues into our forecast next year, in which we expect new home sales to decrease from current levels only slightly due to a modest economic contraction. Okay, let's change gears slightly here and talk about their real estate market predictions for interest rates next year. It says, following the recent decrease in rates, our interest rate forecast is lower this month. So here's a snapshot looking at their previous forecast, which is right here. That was posted in November, about a month ago. Here's their new forecast. Here's what the actual numbers look like going back to 2019 here. So their previous forecast posted 1 month ago was calling for interest rates to be higher than their new housing market forecast here. And they cite the reason for this is because of the recent decrease in rates we saw last week. For existing home sales, it says home sales on a seasonally adjusted annualized basis this October came in at 3.79 million, the lowest level since the year of 2010. With October pending home sales also remaining very weak, we have revised downward our Q4 sales estimate this year. However, we have revised our forecast modestly upward beginning in 2024, largely due to lower projected interest rate environment. So because they're forecasting that rates will be lower than was previously forecasted, they did an upward revision in home sales in 2024 and 25. However, though, the continued heightened volatility of long-run interest rates continues to point to risk around this sales projections here. All right, so here's a summary regarding all their housing market forecasts through 2025. Let's first talk about single-family housing starts. And a housing start, by the way, is the beginning phase in the construction of a brand new single-family house. So for last year, we saw a decrease of 10.8% compared to 2021. This year, which is right here, they're calling for single-family housing starts to decrease by 7.6%, then to fall by 1.5% next year, and then also to increase or rebound in 2025. In regards to multifamily housing starts, this is for 2+ units. That's going to be decreasing by nearly 15% this year, falling another 22% in 2024, and then seeing a slight increase in 2025. Let's also talk about home sales. So new single-family home sales in 2022 really tanked, right? Down by 17% versus existing home sales decreased by nearly 18% last year. Now here's their forecast this year, a gain of 6.2% for new houses this year, whereas a decrease of 18.4% in the resale market. Also a further decrease in 2024 for new single-family houses. So in regards to existing home sales, this, by the way, is defined as single-family condos and co-ops. That is really defined as a home sale according to the National Association of Realtors. So again, they're calling for a decrease of down by 18.4% this year, down to 4,104,000. By my own analysis, that would be a 28-year low, the lowest level since 1995. Then 2024 to be flat. So more or less on par with a 28-year low in regards to home sales. However, though, look at 2025, though, a rebound, a gain of 13%. So here's a look at Fannie Mae's housing market predictions through 2025. I just plugged these numbers in to kind of provide some details regarding how low these numbers really are. So at 4,104,000, again, that'd be the lowest levels going back to the year of 1995, when at that time there was 3,849,000. So this means at 4,104,000, that would be lower than the Great Recession going back to 2008, when at that time there was 4.11 million. How crazy is that? A 28-year low in home sales this year. So I would say this is a real estate market crash for home sales in 2023. This, by the way, is a decrease of 18% compared to last year, and also compared to pre-pandemic levels, it's down by about 23%. Their forecast in 2024 is a slight increase, but again, the lowest level since 2008, more or less a 15-year low. Also down by about 23% from pre-COVID levels as well. Then in 2025, they're calling for an increase up to 4.65 million. That still would be a decrease compared to last year, but also down by 13% from 19 and 2018. So just taking a step back here, this is kind of something I added last time I talked about this. So for comparison's sake, back in 2021, there was 6.1 million existing home sales nationwide. At that time, that was a 15-year high. This is pretty crazy, right? So in the span of just 2 years, they're calling for a possibility in which we go from a 15-year high in home sales down to a 28-year low this year. Also, by the way, here's our forecast that was posted back in November in the previous forecast year. So in 2023, they're calling for 4.127 million. Now it's down to 4.104 million. So it got revised down slightly. However, because their downward revision in interest rates in 2024 and 25, they're calling for an upper revision next year and also in 2025 as well. So next year, they actually revised that upward up by 84,000. Then in 2025, they revised upward by 102,000, going from 4.55 million to 4.65 million. So please leave a comment below with your thoughts regarding their housing market forecast for home sales. I just can't believe that 4.1 million, the lowest level since 1995. Absolutely crazy. Again, I'll state my forecast again. My forecast, which I stated months ago, was in the range of 4 to 4.1 million. So let's see who's right here. Let's get back here. So let's talk about home prices. This is based on Fannie Mae's HPI, or their home price index. So in looking at this chart here, this forecast, they're really calling out that home prices peaked in Q4 of 2000, or will peak this quarter, as well as Q1 2024. This, by the way, a 6.7% increase is an increase compared to the first quarter of 2023. However, as you guys can see, it decreases every quarter thereafter until we get to Q4 of 2025, down 0.4% compared to Q4 of 2024. So overall for the year, they're calling for home prices to increase by 6.7%, then to increase by 2.8% next year, and then a decrease by 0.4% in 2025. In regards to their housing market forecast for interest rates, they're calling for this quarter, this is Q4 this year, to be at peak levels at 7.4%. Thereafter, the steady decrease until we hit 6.1% in Q4 of 2025. And therefore, they're calling for the average rate this year, for the entire year, to be at 6.8%, relatively flat, staying at high levels next year, and then decrease to 6.2% overall in 2025. One more thing I found to be interesting as well. Here's the refinance share of mortgage originations. These are purchases plus refis. So in 2022, 31% of all originations, again, purchases plus refis, 31% were refis and 70% approximately were for purchases. In 2023, this year, that share decreased to 16%, but then it's going to jump to 30% by the time we hit 2025. More or less on par with what we saw last year. So please leave me a comment below with your biggest takeaways from today's video. Also, if you guys got any value out of this video whatsoever, then please hit the like button. I greatly appreciate that. Of course, I appreciate you. Also, please leave me a comment below with your thoughts regarding their forecast here. Do you believe they're right? Do you believe they're wrong? And also, what is your real estate market predictions? I appreciate you. Like and subscribe, and we'll see you in the next video.